Good day, everyone. Welcome to Global Government News. Today is Friday, October 15th, 2010, and I am Darko. Welcome to this economic news segment. New listeners, please visit www.ggnonline.com. That's ggnonline.com. You can learn a little bit more about me and what I'm doing here with these videos. Also, you can view some of the most recent videos that I upload. Basically what I do here in these videos is read the headlines, and sometimes I'll give you my opinion on what I think. I call it news commentary. But the other side is a bunch of links that I post in the description part that I'd recommend that you'd go and check out, because there's a lot of good information. Actually, most of the information is in the description right there with all the links and the headlines. Thank you again for joining me. This first article up is from Bloomberg, and it's titled "Dollar Falls to 15-Year Low versus Yen on Fed Policy Outlook." It says the dollar depreciated below 81 yen, a 15-year low, and reached its weakest since January against the euro, before reports likely to fuel speculation the Federal Reserve will ease monetary policy. And I don't have any formal training in economics, just mostly journalism and news writing. But from what I've gathered, basically what this fancy word means, monetary easing, is that the Federal Reserve is going to buy more long-term treasury bonds, which means that they're going to have to print more money. Yet you'll hear in the mainstream media that there's no inflation. Well, inflation is just nothing more than an increase in the money supply. If I'm wrong, someone correct me. But anyways, moving on here, it says yuan rises 2.5% against dollar since June. We keep hearing about all this crap in the media about, oh, you damn Chinese, you better raise your currency. And, yeah, it sucks for the workers over there because they're not getting paid what they should be. But they're purposely doing that so they can attract companies, international corporations, to operate within China and produce and manufacture. And, well, it's just more money for corporations. That's basically what it means. And, I have a friend that proposes a possibility that manufacturing may, in fact, return to the United States, but it will return with a bunch of, or it'll return to a population that has become accustomed to a lower standard of living. China's currency, the yuan, remained stronger against the U.S. dollar as the central bank set the central parity rate at 6.6 yuan per dollar Friday, a record high since it launched the foreign exchange formation system reform in July 2005. The rate also means that China's currency has appreciated 2.5% against the greenback since July 19th, when Beijing restarted the reform after its hiatus of about 2 years as the country fought the global financial crisis. Next one is China's yuan hits new high at 6.6 against U.S. dollar Thursday. The value of yuan, Chinese currency, the renminbi, hit a new high against the U.S. dollar Thursday, as the central parity rate of the yuan was set at 6.6 per dollar, according to the data released by the China Foreign Exchange Trading System. Next one up is U.S. backs off in currency dispute with China. Well, the Obama administration backed away on Friday from a showdown with Beijing over the value of the Chinese currencies that would have caused new frictions between the world's only superpower and its largest creditor. The Treasury Department delayed a much anticipated decision on whether to label China as a currency manipulator until after the U.S. congressional elections on November 2nd. See, after the congressional elections. That's why I mentioned in my last video, beware, after these little midterm elections, that's when the tax increases will come. That's when the austerity measures will kick in, and all that tyranny will start to continue at a much more rapid pace. So they got to wait until after the elections to continue that. And of course, the U.S. or the Treasury Department, the Federal Reserve, or anybody, to accuse China as a currency manipulator should look to any central bank across any country, and they'll see that they're all currency manipulators. So that's what I'm saying. I'm not an economist, but I've been learning little bits by little bits, and basically that's the conclusion I come to. Every country manipulates their currency. We don't live in free markets. We don't let the market dictate the value of a currency. So it says dollar hits parity with greenback before pulling back. And it says the Australian dollar to reach parity with the U.S. dollar for the first time since the currency was floated in December 1983. The local currency rose to U.S. $1 last night in overseas trading. It was the first time since the 28th of July 1982 that the Australian dollar is traded about $1 U.S. So, and they're saying that it's going up. I don't know. It's like, are those currencies going up? I mean, is there a lot going on over there, or is the U.S. dollar just really, really losing its value? I mean, I already know it's losing its value. It's been losing its value since, we went off the gold standard and that. But I think it's going to keep going down. Consumers show signs of stirring. It says U.S. retail sales rose for a third consecutive month in September, posting a stronger than expected increase that should fend off fears of a double-dip recession, but doesn't signal a strong recovery. And it's my personal belief that there is going to be no real strong recovery. So separately, they're just going to keep dangling that carrot in front of all the suckers to invest their money into, again, so they can have another financial crisis, and then basically the taxpayers will fork over a crap load of money that will go to keeping up these institutions or corporations that should go under because they're committing fraud and they're just inefficient. They should just go away, but they don't. And that's what you call corporatism. Separately, U.S. consumer prices barely budgeted during September, and yet another sign the Federal Reserve might need to take action to combat continued weaknesses in the economy amid concerns about low inflation. So they're all talking about deflation. And it says retail sales rose 0.6% in September. The Commerce Department reported Friday economists surveyed by Dow Jones Newswires had projected sales would rise by 0.4%. So you just project real low numbers because you know that the economy is not going to really recover. Their jobs aren't there. And so if you just undershoot that way, you can always say, oh, hey, kind of like unemployment. Oh, well, they expected there to be, 20% unemployment, but we only had 10%. So, hey, unemployment went down. It was better than they expected. You see how much better that sounds? Gold retreats on dollar rise in mixed markets. Gold fell on Friday, snapping a two-day record-setting rally as the dollar rose, and Fed Chairman Ben Bernanke offered a few new details on further economic stimulus, which prompted investors to take profits. In a day of volatile trade and host of mixed market signals, bullion is still on track to end higher for an 11th straight week, driven by a hardening view that the Fed will resume buying government debt to stimulate the economy. So there you go. And like I said before, when they do that, what does that do? Well, it lowers your purchasing power. 2/3 of the economy is consumer spending. So if people are able to get less with their money, well, then how is that going to stimulate the economy? I don't know. Like I said, I'm not an economist. This is just the way I see it. Oil down first week in 4 on options. Dollar oil prices fell nearly 2% in light. Volatile trading on Friday, posting their weekly loss in 4 weeks as options expired and the dollar rose, sparking profit taking ahead of the weekend. And goes on to say the same thing basically. But this is flashback to 1870 as cotton hits peak. GMO cotton prices touched their highest level since Reconstruction on Friday. Reconstruction? What the hell is this? The fucking Civil War? Excuse me. Excuse me, pardon my French, but as a string of bad harvests and demand from China sparks worries of a global shortfall, the sudden surge in prices, cotton has risen up to 56% in 3 months, has alarmed manufacturers and retailers who worry they may be forced to pass on higher costs to recession-weary consumers. The December cotton contract hit $1.19 a pound minutes after opening of trading on the Intercontinental Exchange Incorporated on Friday. It is officially the highest price since records began back in 1870 with the creation of a New York Cotton Exchange. So, not good news, folks. Not good news. U.S. deficit shrinks nearly 9%. Hey, great news, right? Real good news. The U.S. budget deficit shrank by nearly 9% in the last fiscal year, according to government figures published overnight, and spending decreased and revenues rose. The figures underscored the administration's commitment to cutting the massive government deficit, Treasury Secretary Timothy Geithner said. And, well, do you think they're going to cut defense funding? You may hear that rhetoric in the media, but they're not going to cut defense funding. They're not going to stop the war on terror. They're not going to stop the war on liberty. They're not going to increase all these databases and planetary satellite programs that run by DARPA and the Pentagon. All that expensive stuff is not going to stop. They're just going to cut your Social Security, make you not be able to take it on until 60, 70 years old. Now they're increasing the age of retirement around the world, and they're going to, like I said, they're going to increase your taxes. Now you got the healthcare tax, and they're going to keep squeezing you and squeezing you and squeezing you. And they're going to try to get everything that they possibly can out of you. But they're going to cut social programs. And that's their way of cutting the deficit. But when you look at this, it totally trumps that last article. This is from the Wall Street Journal. Annual deficit stays sky high. The Treasury reported a nearly $1.3 trillion deficit for 2010, down from 2009, but still the second largest in more than 60 years, adding fuel to this year's political debate about the size of deficits in government. So see, it's still the largest it has been in 60 years, but they're hailing this as some kind of humongous recovery. Moving on here, it says state's probe of foreclosures could force reforms. Man, I hate when these things come up. State's probe of foreclosures could force reforms. A joint investigation by every state and the District of Columbia could force mortgage companies to settle allegations that they use flawed documents to foreclose on hundreds of thousands of homeowners. It would take months at least for any settlement to be reached, but legal experts say lenders could be forced to accept an independent monitor to ensure they follow state foreclosure laws. The banks could also be subject to financial penalties and be forced to pay some people whose foreclosures were improperly handled. Moving on, Californians struggle to keep houses. Thousands of people in California are struggling to keep their houses amid allegations that the U.S. banks evicted people without taking the steps required by law. And this woman here, Lavinia Motley from the Group Alliance of California for Community Empowerment, said it would be in the best interest of banks to allow homeowners to modify their loans to accurately reflect the current value of the home, adding this would lower the mortgage payment and allow the homeowner to keep their house and the bank to get paid. Next one's from Reuters. Wall Street blames homeowners in foreclosure fiasco. You have to read this because I'm running out of time, but it says Wall Street's reaction to the allegations that some banks cut corners while foreclosing on 3 million homes since 2007. Quote, pay your mortgage in the first place. So they're basically blaming the public for this and saying that, well, you're going to just be out on your ass. But when it's the corporations that do this stuff, right, instead of them just going under, no, they bail them out and they give them money that's stolen from you at gunpoint. Next one up is family farm orders to destroy 50,000 pounds of cheese. And for any new listeners out there, you'd wonder, well, why would they do that? Why would the FDA do that? Well, they're working for pharmaceutical companies. They're working for the military industrial complex. And basically, it is their credo that there's too many people on the earth. So the solution is to basically call you off. They want to bring the population down to 500,000. And in doing that, they're going to have to mess with the food supply so that you get only their GMO, only their aspartame, only their high fructose corn syrup type food, highly processed and really bad for you. We already know Bernanke, Helicopter Ben, wants to print more money. U.S. owes UN over $1 billion in back dues, and it says more than a quarter of payments owed to the world body by other member states. And then next says Italian protests austerity measures. And David Cameron steps in to quell military revolt over cuts to defense budget. Britain dismisses U.S. fears of deep defense cuts. Social Security COLA complainers should settle down. See, it's your fault. Medicare reform may cost